The JSE is in the red this afternoon as the rand struggles against major currencies, while commodities are also softer. It is a rough start to what's expected to be a busy week on the markets locally and globally, with the Reserve Bank MPC expected to announce its interest rates decision later this week. Let's talk more about that and other issues with Petri Redelinghuys, who's a trader and founder at Herenya Capital Advisors. Petri, good to see you again. Local markets, as I've just been saying, in the red. What's moving them both domestically and abroad today?
Good afternoon. Thank you for having me. Market's cooling off a little bit today. I think we had quite a strong week last week, I guess. I mean, the S&P 500 also slightly stronger to going sideways, I suppose. It feels as though markets are kind of running out of momentum. We've seen the market trade higher quite violently. Well, not last week, the week before, mostly on the back of people expecting the Fed to pivot and stop with the interest rate hikes, basically. That, I think, is a bit of a false hope at this stage. I think the market is very much in a downtrend, and we've seen the market really rally very strongly from time to time, but such is the nature of bear market rallies, right? The market can be very, very violent during the difficult times like we have at the moment. So, we've been in a downtrend for basically the whole year now. And I don't see that there's any real sign of this changing. So the market's cooling off a little bit today, kind of fits into the narrative that we have around being in a bear market. And also, if you have a look at stuff like the US dollar index, for example, that's quite a bit stronger today by almost 1%. So that's putting a lot of pressure on emerging market currencies. So you'll see the rand is over 1% weaker at 17.42. So it just feels as though that risk of sentiment is starting to creep back in. The market rallied quite hard the week before. Then last week, tried to see whether or not that footing could be maintained. The market did not manage to actually push much higher than that. And it feels as though that downtrend is starting to creep back, and we should potentially trade lower into December. Now, usually this last month of the year, December, I know it's a week away, it's not quite yet, but generally it is one of the strongest months on the calendar, and there is that Santa Claus rally effect that takes place sort of between Christmas and New Year, where the market is quite strong. I'm a bit doubtful that that's going to be the case, that we see that again this year. It does happen most years, but obviously not every year. And I think that given the expectation for higher interest rates and more hikes from the Fed particularly, we probably have, continue to see a volatile and difficult market. As well, the macroeconomic conditions haven't really eased up much. I think the major catalyst that could potentially get markets moving in a positive direction is if we see confirmation from China that they are, in fact, easing lockdowns and going back to or dropping their zero COVID policy. Outside of that, the only other thing that can really get the market up is if the Fed turns around and says, look, we're not going to do any more interest rate hikes, which I think is extremely unlikely. So for now, it's gonna probably still be quite tough, and probably be a slightly weaker week ahead, I think.
You mentioned the Reserve Bank. It, together with other African central banks, are now, in fact, looking at potentially using central bank digital currencies. The aim there would be to improve payment systems in the region. How much of a game changer would that be? And especially when you look at sub-Saharan Africa. And for those of us who don't know what these are, explain what we're talking about here, Petri.
Okay, so there's a lot to cover here, I think. So it starts with a history lesson, I think. So during 2008, 2009 world financial crisis, where we had the subprime mortgage crisis in the US, which cascaded into a global recession, and obviously a big market crash in the process. That saw the birth of Bitcoin, right, or cryptocurrency, where transactions are put on a public ledger and are essentially irreversible. And that gives you a sense of transparency of any transaction that is made is 100% transparent. The receiver and the sender are both known, even though, in the beginning days of crypto, it was easy to get an anonymous wallet. These days, not so much anymore. You can still see, which entity is transacting with which entity. You can see the basis of that transaction. Newer technology is now allowing for us to encode essentially specific messages into specific transactions. So this is, for example, what an NFT is, a non-fungible token. It's basically a digital contract. So, for example, you could sell your house and with the funds transfer embedded in that transfer of cryptocurrency or whatever the case is the contract, the actual sale contract for the home. So that is now an irrevocable contract that has been agreed to by doing the transfer on the blockchain. So what's happening is central banks are starting to see the utility in this and starting to see that, well, one, you have a mechanism to be able to essentially track every transaction that takes place, which I don't know about you, is a scary thought to me, that the government sees every transaction that you do, but this is where the world is headed, I suppose. The advantage of that is that there is almost no room for people to be able to make illicit transactions. So, money laundering becomes a lot more difficult if the central bank can see the details of the sender and receiver of every transaction that is made. So, this feels like it is almost a natural next step that central banks, not just in Africa but around the world, are starting to consider. China, in fact, have already implemented what they call a digital yuan, which is exactly what this is, a central bank digital currency. The US has been doing quite a bit of research and analysis on this as well, so the US Fed might start introducing a central bank digital currency as well. And what this will do, it will change the way that we do transactions somewhat. It brings a new level of transparency and accountability to the way transactions are made and accounted for and recorded. So it's a bit of a game changer. Exactly how it plays out, I'm not really sure yet, but this, I guess, is the evolution of technology, and it's being integrated into our monetary system. I think what's happening is that central banks realize the potential that these digital currencies have. And yes, I know, the whole FTX scandal and Bitcoin is crashing and all that kind of stuff. It's not yet infallible, right? The problem is that for the most part, all these cryptos have been kept outside of a regulated environment. And now with some of the things that are happening, they're coming into that regulated environment. And central banks are going, well, there are very clear advantages to how these digital currencies work. And we need to incorporate those into our sort of monetary system, lest we get left behind. So I think that's essentially the push that's busy happening. And it will change a lot of the things. It'll probably make it a lot easier for people to do transactions cross-border. It'll make reporting, for example, Reserve Bank reporting or balance of payment reporting, that kind of stuff, a lot easier. It depends on how it's developed. And I think that there's obviously a huge amount of research that needs to be done before implementation.
Briefly, PPC has released its interim results, citing the devaluation of the Zimbabwean currency as well as cement imports as some of the challenges that it's continued to face. But how did they do overall?
So PPC is actually fairly well positioned, I think. I mean, if you look at the total group revenue, that increased by around 9%. Margins obviously under a bit of pressure. Profit before tax managed to increase as well. However, if you look at the headline earnings per share and the earnings per share measures, those are both down. And I think a large part of that is because we've had this sort of reduction in the value of the contribution that PPC Zimbabwe makes to the group. So they were contributing around 24% of total revenue. That's down to now 17%. This is obviously on the back of a devaluing currency, hyperinflation. We know that's been a problem in Zimbabwe for many years, and they've tried to sort of jig their currency a few times and are yet to find a way that works, to be honest. And this obviously puts pressure on companies that operate in that country. However, it does appear to me that PPC is well positioned for essentially the anticipated ramp up in construction as well as infrastructure spending that the South African government will be doing, and they stand ready to produce and supply cement for that, and are also positioned in such a way that if there is a sharp increase in demand for cement, they can match that or meet that demand with production in relatively easily and relatively quickly. So although there are some goods and bad, overall I think the results are quite satisfying. It's nice to see that revenue is up, the company is well positioned.
Petri Redelinghuys, I think we've lost Petri. Apologies for that.